Property Alliance again. I'm here with Efrain from First Colonial Bank, and we're talking about mortgages and the buying process. Efrain, what can a buyer do to prepare him or herself for the mortgage process to get pre-qualified for a mortgage?
Right. The various steps. First, we have to identify whether or not they're prepared, they're ready. Now, what do I mean with that? Well, if you have a lease and you're leasing at an apartment, your lease is not due until the next 4 months. Well, you won't be able to do anything for those next 4 months unless you break that lease, and then there's a financial cost to that, right? However, if you're within 3 months of that lease, that might be the perfect time to call the bank, call a realtor and say, listen, I would like to get pre-qualified because in 3 months, I need to either be out here, I need to make a decision. Right. At that time, we will run credit, check their assets, their income, to see if there's anything that needs to be worked on the credit, and then get you prepared so that in your mind you can tell whether or not you're going to be able to afford the house that you'd like to buy, right? Okay. So that's how you prepare. You prepare by first talking to the bank and the realtor to see where you're at financially, income-wise, and timing-wise.
Does the bank look to see if there's been a certain amount of time in employment or?
That is correct. We will review the last 2 years. It doesn't have to be the same job, and sometimes doesn't even have to be in the same line of work, but we do have to verify 2 years of history, and if there's any gaps within those 2 years. Some people are seasonal, right? They work for 10 months, 2 months they're out, and they collect unemployment, which is perfect, but it has to be documented.
Understood.
We just need to make sure that it is documented.
Okay. And how about the different types of mortgages out there available to buyers?
A million types. Yeah. Well, the more common ones are conventional. Okay. Conventional loans, usually 20% down, 10% with PMI, which is one of those terms that people are like, what's PMI or MIP? Is the mortgage insurance or private mortgage insurance. Then there's your government backed financing, which are FHA, USDA, and the Veterans Administration. Those are all popular products. The customer calls in at the bank. We're going to try to find out which one best fits their need. Right? You may have 20% down, but you may not want to put 20% down, and you're comfortable with going FHA and putting 3.5% down and saving your money for any incidentals in the house. So this is why you talk to the bank and the realtor.
Good point.